The budget meeting is almost over when the operations director slides a proposal across the table. The finance team looks at the total cost for safety certifications and asks the inevitable question, what is the actual return on this investment? It is a standard reflex to view safety programs as a sunk cost. On paper, they look like a pure expense, a combination of course fees, consultants, and paid time off the floor to satisfy a regulatory requirement. But that accounting perspective misses the reality of the shop floor. When proactive investments are cut, the risks remain, and the resulting financial liabilities are quietly waiting to be triggered. The information provided in this video is for educational and informational purposes only. Treating safety as a regulatory nuisance guarantees financial bleeding. Treating it as a capital asset produces massive, verifiable returns. The baseline arithmetic is surprisingly strong. According to data tracked by OSHA and the National Safety Council, employers see a return of $4 to $6 for every single dollar invested in a workplace safety program. This chart illustrates that ratio as a percentage. While a chief financial officer might be satisfied with a 10% return on a traditional stock portfolio, a comprehensive safety program consistently delivers a 300 to 500% return on investment, and the data holds steady across distinct sectors. Whether you look at manufacturing, construction, or healthcare, the financial yields remain consistent. These yields exist because the cost of a single workplace incident is massive. The average cost of an OSHA recordable injury is around $42,000. Preventing just one easily pays for the training of an entire department. To capture those returns, leadership must move past passive compliance and commit to a proactive, certified safety management structure. Proving these numbers requires adopting a framework called the total cost of risk. This is the precise way to account for both the investments made to prevent accidents and the financial damages incurred when they happen. A transparent total cost of risk ledger starts with the direct expenses. Securing certifications usually requires budgeting between $150 to $1,500 per employee for course and exam fees. Then you have to add the indirect implementation costs. This includes the employees' paid wages during training, coverage for their shifts, course materials, and administrative overhead. Bringing this fully loaded estimate to the finance team is crucial. It shows the safety department understands business economics and builds credibility for the pitch. That planned, controlled expense is small compared to the sudden disruption of a severe injury. Medical bills are just the start. An organization also absorbs lost productivity, equipment repair, and overtime pay to cover the injured worker's shifts. By putting every hidden cost on the table, both for training and for accidents, you create a complete ledger that proves a legitimate return on investment. The largest financial lever in that ledger is tied to an actuarial algorithm called the Experience Modification Rate, or EMR. Insurance companies use this metric to adjust a business's workers' compensation premiums based on its historical safety record. An incident drives the EMR up, forcing elevated insurance rates for 3 consecutive years. Conversely, a certified safety program actively suppresses incident rates. Over 36 months, this drives workers' compensation premiums down by 25 to 40%. Some states even offer an immediate direct 10% discount on premiums just for having an approved safety program documented and running for a year. Those hard savings are compounded by indirect efficiencies. Safer environments retain staff longer, bypassing the expenses of replacing a worker, which typically costs half to double their annual salary. A trained workforce also prevents regulatory breaches, steering clear of OSHA citations that routinely carry penalties of tens of thousands of dollars per violation. In practice, safety certification functions as a legitimate tool to manipulate actuarial algorithms, actively converting insurance liabilities into compounding cash flow. Here is the exact calculation used to validate those savings. You subtract the total costs from the total benefits, divide by the total costs, and multiply by 100 to find the percentage. Consider a small business with 10 employees. They invest $12,000 in full-scale training and realize $16,000 in annual savings from reduced injuries and equipment damage. That yields a 33% return and pays for itself in 9 months. A medium-sized company certifying 50 supervisors might spend $50,000, but by lowering absentee rates and backfill overtime, they save $80,000, a 60% return that breaks even in 7.5 months. For a large enterprise training 300 employees, a $350,000 investment generates over $500,000 in savings. The return hits 49%, recovering the cost in roughly 8 months. Across every scale, these conservative projections confirm that the initial investment is fully recovered well within a single fiscal year. Since the math scales so predictably, the question becomes why some companies plateau at 100% return while others push closer to the 500% ceiling. The difference lies in leadership. Organizations hitting the highest returns anchor their systems with individuals holding verified professional credentials that provide a standardized foundation for every safety protocol. Designations from the Board of Certified Safety Professionals, like the CSP, ASP, and CHST, directly correlate with a lower total recordable incident rate. These credentials also provide the necessary verification to satisfy the pre-qualification requirements for major service contracts. An organization's safety policies are ultimately only as effective as the independently credentialed professionals who design, execute, and enforce them. When building the business case for your finance team, structure the pitch clearly. Lead with the benchmark data, outline every transparent cost, and cleanly divide hard savings from soft savings. Safety certification functions as a high-yield investment, consistently outperforming traditional capital expenditures. Use the data, map out your total cost of risk, and secure the budget needed to deliver outcomes that protect both the workforce and the bottom line. If you want to learn more about safety certifications, ROI calculations, OSHA compliance, and building a stronger safety program, subscribe to the HSE Study YouTube channel. The math is real, the returns are proven, and the next step is execution.